All right, let's jump right in. Today, we are exploring a technology that is seriously poised to transform one of the world's oldest and biggest asset classes, and that's real estate. We're not just talking about a small change here. We're talking about a fundamental shift in how we own, trade, and even think about property. So, let's get into it.
I want you to imagine something for a second. What if, instead of needing millions of dollars and months buried in paperwork to buy a commercial property, you could just pull out your phone, open an app, and with a few clicks, buy a tiny piece of a landmark building in New York or Tokyo or London. And then, whenever you wanted, you could sell that piece instantly, just like you trade a stock. Now, this isn't science fiction. This is the core promise of tokenization.
So what exactly is tokenization? Well, at its heart, it's a really simple concept. You take the legal rights to a physical asset, in this case a property, and you represent those rights as a unique digital token on a blockchain. You can think of each token as a digital certificate of ownership. It's kind of like taking an old paper stock certificate and turning it into a secure, digital, and super easily transferable unit.
And that brings us to our first big idea, the concept of a new digital deed. We are literally moving beyond paper documents stuck in a filing cabinet somewhere and into a world where ownership is proven and transferred with some serious cryptographic security and transparency.
And believe me, this isn't just a theory. According to research from the Cambridge Judge Business School, the on-chain market value for all tokenized real-world assets, or RWAs as they're called, has already hit an incredible $30 billion. That shows you that some very serious capital is flowing into this space, and it's a huge signal that a major transition is already underway.
So that huge number kind of begs the question, right? Why is this happening? What are the real forces driving this revolution in real estate and other assets? Let's break down what's really going on here.
Now, if we take a closer look at that market, it gets even more interesting. While yeah, lots of other assets are being tokenized, real estate already makes up a massive $4 billion slice of that pie. This shows us it's not some niche experiment. It's a specific market with real, growing traction.
And research from ByteTree highlights that this growth isn't just about crypto speculation. No, it's being driven by really practical real-world benefits. First off, accessibility. It opens up real estate investing to, well, pretty much everyone. Second, transparent settlement. Every transaction is recorded on a public ledger that can't be changed. This also creates a truly global reach, connecting buyers and sellers without all that geographic friction, and it gives you way more security in proving who owns what. So the most important point is this. This is all about utility, not just hype. Hey, if you're finding this look into the future of property useful, do me a quick favor and hit that like button and subscribe to Digi-Gold. Your support really helps us continue to break down these complex financial topics for you.
Okay, so we've covered what tokenization is and why it's growing so fast. But this next part, this is where it gets truly transformative. We're going to look at how these digital assets plug into a whole new financial world through something called the DeFi credit engine. This is the mechanism that turns a static asset into something dynamic and productive.
So here's how it works. A property owner turns their building into digital tokens. Then they take those tokens and deposit them into a decentralized finance, or DeFi, lending protocol. You can think of it like an automated bank that runs on the blockchain. Instead of loan officers and paperwork, it just uses computer code to handle everything. And just like that, instantly, the owner can borrow funds against the value of their property without the crazy long process of a traditional loan. They've literally unlocked the liquidity of their asset.
And this new power has some pretty profound market implications. This quote from the Cambridge Judge Business School really gets to the heart of it. By creating this new credit channel where people can borrow against their tokenized property, DeFi introduces a whole new dynamic. It means the supply and demand for credit in the DeFi world can now directly impact the prices of tokenized real-world assets. It's a powerful new link between digital finance and the physical world.
So let's just boil it all down. What we are witnessing here is the birth of an entirely new parallel credit system for real estate. It is faster, more automated, and way more globally accessible than anything we've ever had before. And it's all running on the rails of blockchain technology. This is so much more than a new way to trade. It's a whole new way to leverage assets.
Which brings us to the bigger picture. When you zoom out, you can really see we're looking at a tale of two worlds. The old, traditional way of handling assets and this new, tokenized future that is coming up fast.
And this illustrates the difference perfectly. Traditional assets like real estate are notoriously illiquid. They're slow to trade,
The ownership processes are often opaque and confusing, and the markets are super localized. Tokenized assets just flip that whole script. They offer the potential for almost instant liquidity, radical transparency because of the public ledger, and access to a single global market. This is the fundamental upgrade that tokenization brings to the table.
So what do you think about this shift? Is this the inevitable future, or are there some major hurdles we haven't touched on? Let us know down in the comments. And if you want to stay ahead of the curve on the future of finance, make sure you're subscribed to Digi-Gold for more deep dives just like this one.
And we'll end on this final thought. We focused on real estate today, but this technology can be applied to, well, just about anything. Fine art, classic cars, private equity, you name it. As our world becomes more and more digital and financial access keeps getting wider, are we heading towards a future where every single asset we own has a digital twin, ready to be traded or leveraged on the blockchain? It's a massive question for sure, but it's one we might see answered a lot sooner than we think. Thanks for watching.